Welcome to the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with Jonathan Goss, the founder and CEO of Nomad Financial, a provider of complete tailored finance solutions to high growth companies. Welcome to the call, Jonathan.
Great to be here.
Jonathan, you grew your company's revenue from $485,000 in 2014 to $3 million in 2017. A 519% increase. Before we talk about how you grew your company so fast, can you briefly share what your company does beyond my quick intro and how your company differs from the competition?
Yes, absolutely. Happy to dive in a little bit. First of all, I appreciate being here, and the intro is spot on. To elaborate a little bit further, Nomad works with clients through three key areas. We provide accounting and bookkeeping services. We do tax and tax advisory. And then we also consult for businesses as their CFOs through our tailored finance group. Our clients range in size, given the large variance of services we provide. Our clients range in size from being as small as just getting off the ground and needing tax support all the way through preparing for exits. And our consulting and tax teams are ensuring that they're maximizing their value as they do that. But I would say that overall, our sweet spot of clients we work with have just started to raise institutional money, or they're a bit into it, and they're starting to build and scale operations for that growth. And they recognize that their financial operations are not quite ready for that stage of their business, and they'll bring in us as professionals to support that piece as they begin to scale.
Can you share how big these companies are in terms of revenue or in terms of investment size that they received?
Yeah, ignoring the kind of like the low and high end of the range, I think most of the clients we work with have raised anywhere from $750,000 and $1 million on the low end. On the high end, we have clients who raise in excess of $100 million, who are growing at quite a different pace and whose operational needs are different. But I'd say that if you're to build a bell curve of where our clients fall, I'd say you'd see the most between having raised $5 and $25 million.
Okay, and what kind of revenue would these companies have at this juncture?
Yeah, some are pre-revenue. They're building a product that isn't quite being monetized yet, and then you'll see on the other end, you'll see companies that whose revenues do exceed tens of millions and over $100 million. But I think our sweet spot's probably where the revenue is real. It's in excess seven figures, and probably into the eight figures is where we typically see our clients. Okay,
now the clients that you're looking to work with here, especially the pre-revenue ones, you don't consider them too risky to work with, but there's a argument that maybe if you focus on ones that had more revenue and a more of a proven product that has market acceptance, that then the risk of the clients not paying you would be much lower. What's your take on that?
Yeah, so I think it really depends on the type of business it is, the space they're in, and how they plan on financing and growing that business. Right? There are definite businesses where it makes sense to work with, and we do work with highly profitable companies that are focused on profits and scaling off of their own profits. But then you will find companies that have developed products that haven't quite figured out their monetization model. But given the space they're in, whether it's consumer facing technology, for instance, where they're trying to build a large moat, they're scaling fast, they're raising a lot of venture capital to support that growth. I think that the supposition is that, and the thesis behind the structure of the company is that they're going to be able to flip monetization on later, but for now their biggest focus is on growth and achieving things such as network effect or brand recognition.
Right, and imagine by working with these smaller companies, 1 in 10 or 1 in 20 are going to really nail it, and then they will grow rapidly, and you'll participate in that growth as well.
Absolutely, and they're not. And to be clear, they're not using all of our services, right? A smaller company may only be using us to, stay up to date on their tax compliance and possibly doing, accounting and bookkeeping. Whereas the larger clients, the needs and support we're providing is much deeper and much larger.
Right. Now, can you share a bit on what the three drivers were of your growth when you went from $485,000 in 2014 to $3 million 3 years later in 2017?
Yeah, so that first year is pretty much our truly first year in business. We've been open a number of months before that, but we were focused on getting off the ground, and we really started building our brand in the New York City market. which is where we're headquartered and where I've spent now, over 13 years focused in the New York City tech scene. And my partner has a similar background and experience. So, we started really going out and taking our relationships and focus on how do we support these founders who need financial support? How do we support investors whose portfolio businesses need it? And, it's early on, it's a lot of door knocking, emailing, texting, attending events, right? Doing the little things that, when you're bigger, you might not always do the same way, but early on, it's the effort you can put in to really start getting off the ground. But, I would say in terms of drivers, what you probably see, for us are geographic expansion and service expansion were two of the bigger ones. Most of our clients initially were based in New York. We now have an office in Boston. And we've also had team members who have been in other cities at one time or another working with companies. And our clients now not only are across the US, but they're also international companies that have opened up American operations and need support as well. So I think that's that geographic piece. And then in terms of service, when we initially launched, we were just doing the CFO consulting practice. And then we added accounting in that first full year. And then we've later added on tax a couple of years after that. So we're able to continue to find ways to add more value to our clients and support them in additional methods that they were finding the market to be unsuitable for their needs. And there's a lot of reasons I could go into that. But for us, we came into this launching Nomad as a place to solve these pain points for founders who know they needed financial support, but didn't know exactly what they needed and didn't know what it should cost and didn't know how much time it would take. And we wanted to add transparency and simplicity to that process for being able to support this piece of the business while they focus on products and the other pieces, their other operational pieces they need to make sure are being executed well in order to support the growth that they want. So those are probably the two biggest ones. And then the third one is, there's a level of organic growth, right? Hiring another salesperson, to furthering develop our relationships, providing high quality work that, generates referrals back to us. These things all kind of play off each other.
Right. Got it. Now, can you talk a little bit about geographic expansion? Now, is that limited by having boots on the ground where your clients can see the people, or are you able to work virtually and your clients can be anywhere?
It's a really great question. I think that traditionally people saw businesses either where you're focused having on an inside sales force where all your salespeople are sitting in one room, they're doing a lot of phone calls, a lot of emails, it's inbound, they're not having to go meet people in person. And then you have your outside sales where people are, boots on the ground in those markets, shaking hands. And I think it's a little bit more blurred than it used to be. We definitely are skewed towards the boots on the ground on the sales side. We do believe this is a relationship business. And early on in any relationship, we do think FaceTime matters, but a lot of the work we do is remote. It's not only more efficient for our team to do, it's more cost effective for our clients. And a lot of times you get past a certain stage of the work and it's just easier to do that. But being able to see people face to face definitely matters. It's a trust business. And so while technology has facilitated a path in which we're not always there in person, where you can have a distributed workforce. Our team is primarily in the New York office, but our consulting team is always out and about and seeing clients. That despite having that tech in place, there is something to be said about that seeing people eye to eye, shaking their hand, sitting in a room with them, and being able to get work done, at a faster speed because you're working with each other in the same physical space.
So right now you're in New York, you're doing work in Boston. What other areas are you doing work in where you have boots on the ground?
Yeah, at different times we've had people in LA and San Francisco, and I think we'll be back there at a certain point where we continue to invest in those markets. But our we've been able to build quite the moat around New York and the space we're in, and Boston, and the team we have in Boston as well, and really support that ecosystem. And I think we'll geographically be able to kind of invest more into those markets as we grow. But we've been trying to be more recently the last couple of years be more thoughtful about what geographic growth looks like and being able to test different theses around that. Whereas before I think we were a little ambitious and found salespeople in different markets. But you can run into challenges where you have a salesperson on an island and the team's not there. It's just a little bit more challenging.
Right. And so the boots on the ground are just salespeople, or you also have account managers or consultants as well?
In Boston, for instance, our tax team is primarily based there. And so for us, that's, that allows us to, develop deeper relationships with the clients there. They're getting to see those folks face to face along with our salesperson that is there. In our business, it's really hard. You don't have a traditional sales team where one person's closing the sale and then they're handed off later to an account manager to run. There's so much trust being built initially and a relationship being initially built by the salespeople that we actually we focus on keeping the same person involved as a salesperson and account manager throughout the life of the relationship, along with while delivery is happening. So that way the client's still going back to the same person on our team who they have that trusting relation with if they're upset about something or if something's going wrong, or even to just pass along good news when they're really happy. We get to, have that salesperson go back and share that positive news and positive feedback back with the team.
Okay. So in Boston, you have a tax team, you have a salesperson. You're based in New York, so I assume you have a lot of boots on the ground there. And you said briefly LA and San Francisco. Does that mean that you had people there at one point and currently you don't?
We had salespeople and we've had some consultants who, on our consulting team, on our CFO consulting team, we've had them in those markets at different times. But as we've seen, one of the things that happened for us is that our model shifted to where most of our CFO consulting team we've moved in-house. Although we do have some exceptions, but we've primarily moved the team in-house. And so that shifted away a little bit from having the consultants remote, but it's still something we do opportunistically. And then we've had salespeople in those markets as well who have helped us go in, develop really key relationships, and then a lot of times we've been able to support those relationships in the long run from New York. But I think at times it'll make sense for us to go back into those markets and reinvest in them as well. Right.
Well, just from looking at your total revenue you had so far, and I haven't done the numbers, but I imagine you have a lot of opportunities still in New York and Boston alone before you really need to expand too much further.
Absolutely, and I think that was one of the decisions we made was we should definitely focus on going deeper in New York. It's a far higher ROI to put our time and effort here than focus on other geographic markets. I think we didn't want to ignore any kind of low hanging fruit in those markets, but in terms of real investment, it makes a lot more sense to focus in New York, right? It's a gigantic market. There's a lot going on here. There's a lot of businesses, both startups and small to medium-sized businesses that we can work with.
Yeah. Another company I recently interviewed, they chose to start with the New York market as well. And it's super competitive, but the opportunities in New York are just enormous.
Exactly.
So now for your second driver, service expansion, you mentioned about finding more ways to add more value to the founders of the companies. How do you go about finding the new ways to add more value?
Yeah, the easiest way is listening. Funny enough, right? A lot of times it's not that hard to see what's needed. A good example of, what led to Nomad was I was the first head of finance and business development at Vimeo. And when I left, I started working with founders and you started seeing the same themes. They knew they needed financial support, but they struggled with finding the right help. They'd have a board member who, when they need help with modeling, the board member might tell them, oh, you should find a controller. And the controller is actually not the role you need for that. And so, as I got more involved with these companies, I said, okay, these guys need strategic support from a financial expert. And that's what led us to launching Nomad. But suddenly, to be a really good CFO, that your companies need accurate financials. And when we were testing different options in the market, some that were more heavily tech-based or offshoring based, we tested some where they were light service-based, but they're kind of mom and pop shops. We just found that it had been insufficient. And we're like, well, we can't do a good job. What does a good job look like? And what would that look for our clients? And that's what led us to hire our first accountant and then eventually build up a pretty significant team supporting clients for that. And, in that accounting space, you knew that there's really good accountants out there, but you look at either the Big Four or the Big Four equivalent in terms of these accounting firms, they don't want to touch the day-to-day accounting. They specialize in tax and audit and valuations, and the day-to-day accounting is just not on their radar. They're not built to support that kind of work, and their prices aren't reasonable if that's what you're trying to get done. And that all makes sense. Their business model makes complete sense for what they're doing, but that leaves these companies, out in the cold. So we said, okay, let's add that for accounting. And then what we started seeing was the same issue for tax. We wanted to hand our tax our clients off for their tax needs to companies without doing it ourselves. And a lot of the firms we worked with, as they got bigger and they got more successful, the minimum filing fees they'd want each year to be a relevant client for them kept growing higher and moving up. And so you suddenly have these really attractive Series A, Series B companies, but their filing fees might only be $4,000 or $5,000 for the year. And that's not enough to be on the radar of these bigger firms. Or at the same time, they would be for those bigger firms because they say, oh, here's a growth opportunity, but now you're the smallest client, aka the least important client from a revenue basis to these much larger firms. And so, we had a choice. We either hand them off to these one-off CPA folks whose work quality we couldn't really trust, or we're going to do it ourselves. And we reached a point where we said, let's do this ourselves. We can provide this better. And so I think when you start to listen and see the needs that your clients are experiencing, sometimes you'll help fill those needs in by finding other service providers that are out there and doing quality work. And sometimes you'll decide that the best way is to do it yourself.
Right. So what do you think would be the next service that you'll be adding that you're seeing people ask for that the founders need?
It's a great question. I don't think I'll give away anything quite yet. The stuff that we're not doing ourselves, at least that we're not taking to market. But I do think there's ample opportunity in the space, for ourselves and for our competitors to continue to figure out how to grow and provide additional service to what we're doing. I think the biggest trends, though, that are driving this in many ways is technology. You go back 30 years, you needed to have an accountant full-time in the office working their way through your financials. And even 10 to 15 years ago, even the software was still locally based on a server. And now you have, for the last 5 years, all the accounting is done in the cloud. You're using additional peripheral services that plug into that, software such as Expensify, your bank account feeds will plug into the accounting software. So it adds, it adds a lot of enablement to driving efficiency within the process. And suddenly you go, I don't need a full-time person. And I think that's driving a huge part of what's allowed these services that we provide and that our competitors provide to continue to grow and flourish, right? And it makes it more enticing for a company to go, I don't need somebody full-time doing this quite yet, right? I'd be overpaying if I hired a full-time CFO so early, all right? I'm far from the exit, and it doesn't, based on the responsibilities I want to give them outside of just finance, it doesn't make sense.
Right, exactly. For the third driver, you talk about organic growth. You talk about how you hired a salesperson. You talk about referrals. Can you elaborate a bit more about the organic growth and what you might have done to help stimulate that?
Yeah, nothing matters in terms of trying to go after organic growth if what you're promising on your sales process doesn't align with what you deliver, right? So let's start there, right? The key is ensuring that you're providing a high quality service as you promised, within the cost expectations of what you've set with your clients. And if you do that, those clients will walk around and they're going to be positive influencers for you. And they're going to tell other people about how they're successful and who helps them and who is helping them. And you're one of them, right? So they'll recommend the lawyer they use to get their company off the ground and to negotiate contracts. They're going to talk about the financial services firm that has provided key support, both strategic and operational, right? And they'll talk about the marketing firm that helped them figure out how to grow and spend money effectively. And so, if you go in and you don't deliver, what's the point of hunting referrals when that person can't stake their reputation on the quality work you're going to do, right? That's what a referral is, right? We refer our clients to folks all the time when they need support from other places. And my team is not going to stake both their individual, our company brands, and my own personal reputation on a provider who we don't trust.
Right.
And so it's all about the work. And if you do good work, right, at a good price, or call it a fair price, that meets and you meet the expectations of your clients, they're going to be happy to tell people about you.
Right. Okay. Got it.
It doesn't mean everything comes in. There's still some work you have to do to continue to drive those referrals in your business, right? There is an outgoing piece of activity you have to partake in, but that won't be effective if you're not doing good work.
Right. You also mentioned when you were sharing the drivers about hiring a salesperson. Can you talk more about your thoughts about hiring a salesperson and perhaps maybe the marketing you executed as well to help support the salesperson?
Yeah, I think for us early on, the key was finding somebody who can handle the different pieces of sales, which is a challenge when you're bigger, right? When you're a much bigger firm or company and you're doing sales, you're really carving up the different pieces of a sales organization. You're going to have someone who goes out there and is going to attract leads. You have a different person who may be screening those leads for ideal clients, and then you're going to have someone who's going to focus their time on closing those leads. But early on, when we were a really tiny firm and just getting started, the first salesperson I hired, who's really wonderful for us, his name was Deep Katral, and he could handle a number of different factors. He's very good at developing those relationships and filling the top of his funnel. He did his own outbound marketing. He did his own outbound emails, all the way through being able to close. And different pieces of that, I would come in and support him to make sure that we were getting things through the funnel and across the line. So in that way, he didn't feel like he was on an island. But I think the key, for us early on was having somebody that role. As we've grown and we've been able to kind of bring in a lot more inbound clients through all the the hard work we've done over the years, right? My biggest focus is ensuring that the people that are my salespeople are really strong closers, right? And we've used different methods for getting them leads and conversations. But if they're not strong closers, for us, the investment in the first piece isn't worth it.
Right. Can you talk about what you've done so far to generate leads for the salespeople?
We've tested so many different things. I think there's traditional things in this space that you read about and still lead you in the right direction, right? Everywhere from hosting events and sitting on panels as a way to display expertise, all the way through your outbound, attending a lot of events, being in the community, being at the same events as other founders and decision makers who will help decide on who they bring on when they need the support is an important piece of the legwork to get those leads to the door. And then we've leveraged different service providers and technologies as to process our outbound strategies, along with investing in content to ensure that when people are looking for services like our own, that they find us. Right.
Now, I did a little bit of checking out of your pay-per-click campaigns and your SEO activities. I didn't see a lot on that front. Either my tool is totally wrong, or you're using a different domain for both. Now, are you doing much pay-per-click stuff right now and SEO work?
Not much on the pay-per-click. On the SEO side, we have invested in content and developing it. Some of it is the more traditional means. Some of it we were trying to stay ahead of the curve on social channels that get in front of the right folks' eyes, and it's kind of a reminder, along with using email campaigns. I think there's always more work we could do. We've done a strategic session ourselves on what do we want to do for 2019 as our next step on driving that. But on the pay-per-click side, we've done tests with a couple different partners, and to date, it's really been hard for us to see the ROI that we would expect on the spend we were putting into it.
Yeah, pay-per-click is challenging, right? At the very beginning, I think you need to enter it with the mindset of you're buying data, right, to learn what's working and what's not working.
Absolutely. I think the funny thing for us is, if we were an e-commerce play and we knew that the volume and the market size for the kinds of people we go out and sell to was massive. You're like, okay, I'm selling for parents, right? There's 40 million parents in the U.S. or 25. I have no idea what that number is, right? So I hope nobody listens and quotes me on this. It's like, oh, that's a huge market. I assume it's large. Where you might run tests against tens of thousands of people, knowing that when you find you can later optimize for those millions of parents that are out there, right? And that's why a lot of consumer businesses do raise capital, is because eventually they start to figure out their CPAs versus LTVs and go to market and spend against that. I think the challenge for us is when we start to carve up the actual targets of people we can go after, the list isn't so large that you can continue to advertise against them effectively, right? There are only so many founders of companies that fit our profile, or CFOs or controllers who are looking for services like ours that we can go after. And a lot of times, marketing is not the most effective channel to reach them. Or marketing for pay-per-clicks.
Right. Now, can you share what your profile is of the founders and CFOs and CEOs that you're targeting?
Yeah, I mean, I think to go back to the beginning of our interview, it's those companies who have raise enough capital or have generated enough revenue, to make sense for us, that they can afford the bulk of our services, right? If you're just using us for a tax return, it's not quite ideal. If you're going to use us for some level of advisory on tax and accounting and possibly our CFO consulting, then it starts to make more sense. And so, you're looking at these folks out there whose companies are the right size and the right scope for us, right? Versus where you start to look at service providers who are much, much larger than us, who work with much larger businesses and take on different pain points that those businesses experience than what our team currently serves.
Right. So you said before the list of these people just wasn't that big. How big a list are you talking about here? Talking I guess primarily in New York and Boston. Are we talking hundreds of people, really?
Yeah, I mean, I think if you look, like as an example, if you're to look at founders who've raised a seed, a Series A or Series B over the last 2 to 3 years in New York and Boston, you're talking into the single-digit thousands.
Okay.
Right. That's your target list there.
Right.
I think our target list can be bigger than that, but you're not talking, tens of thousands of companies here.
Yeah. I totally understand.
And our goal isn't, there are people in our space, whose goals are to go after every little tiny potential client, right? If you decide to start a company, you're going to start a small business, and maybe it's just you and you're consulting on your own, and you go to ZocDoc to create your LLC, and then someone using like 1-800 accountants, like 1-800 accountants, they're trying to go after every little scrap and every little piece, and they want to, get a little bit of monetization on everybody, right? And then they're talking the millions of business owners who exist every year, who start a business, and 50% of those businesses won't be around in 5 years, right? That is not our target market, right? Our target market are the folks who have a clear path of growth, and they're not just going to be a 1 or 2 person shop, but they really want to grow something significant and grow their business, and they know that they need support and expertise to get there.
Right. Bit hard to quantify that at the very beginning, right?
Yeah, there are. Listen, we did an exercise like before I started Nomad. Both my partner and I, independent of each other, did exercises to assess the size of the market and how big the opportunity was in New York alone, where we were starting, to say, is it worth doing this? And we confirmed for ourselves it was worth doing. And that was with data 5.5 years ago. That when the New York City market was smaller then, so it made sense for us to do it. And over time, we've been able to confirm it was a good decision.
Right.
I think being on the Inc. 5000 list is one of those pieces of confirmation. But at the same time, we're always looking, where does our next range of growth come from, and how big can this be, and how do we get there?
Right. Now, earlier in the conversation, you mentioned you and your partners did a 2019 strategy session. What can you share with us about your 2019 plans?
It's a good question. I hadn't thought about coming on here and what I would want to share. I think the big things for us that we're always constantly thinking about, and I'll give as an overarching theme that we think about when we consider our strategy sessions. There's 2 sides of it for us as a business, and particularly as a business based on human capital. There's going back to, I think, some themes we talked about already. What do our clients need, right? Where are there additional ways for us to leverage our expertise and add value to what our clients are already doing? Either our expertise or folks who could join our team and lend their expertise, right? Where are those companies that we should be focused on, right? Are there additional markets that we should be thinking about? I think that's one piece of it. And also what needs are changing or dynamic, right? If you think about, finance themes of 2018 leading 2019, like there were some tax law changes that affected a lot of companies, right? And making sure that we were prepared to support those companies was a big part of that. And then I think the other side of the equation is a company where human capital is what you are, right? I don't have a product, right? If my people leave, there's not like a product left behind, right? They're providing service. Is what makes Nomad the most exciting place for them to work? What is providing them the growth trajectory that they want to be on personally and professionally within this space? And those are themes that we have to think about too, right? Because if our team isn't happy and excited and motivated to come to work every day, right, then we're not going to be able to deliver good product and fulfill those needs for our clients. And I think part of the beautiful thing was, as you grow over time, is you get better at identifying talent. You get better at attracting good talent if you're doing it the right way. And for us, building an amazing culture where people want to work is a big part of that. And we're continuing to do things. I think we're going to have a very large, like one example is we're going to have a very large offsite for our team, and the focus on that is connection and team more so than strategic vision and improving operations. Right? We have other moments and things for that where it's where we have paths and processes to discuss those pieces. But if you're not investing in people right now, you're doing something wrong.
Right. Now, are there any numbers that you're comfortable sharing with us at this time, like percentage sales growth they're looking to target, percentage number of additional clients you like to onboard, anything along that front?
Yeah, it's a good question. I think one thing that we always say is, we think that we're always looking for a pretty significant growth rate every year, and it gets harder, right? Your baseline, in the equation of growth, right? The larger your denominator gets, the bigger your numerator gets to support 20, 30, 40% year-over-year growth, right? But I think, given where we are in our size and what we think we could do, we're always constantly thinking in that range, right? Something like 5% growth would be year-over-year would be incredibly disappointing for us.
Yeah. I mean, given the relative size of your market, right? I mean, huge opportunity still in New York and Boston alone.
Exactly.
Can you share, what challenges, what obstacles you need to overcome to achieve a growth rate of 20 to 40% or so revenue-wise?
Yeah, it's a really good question, right? One is the types of services you're providing, how are those dynamically changing. A really good example for us was, last year, one big theme was, the blockchain and ICOs, and the different coin offerings. And, part of being a service provider was making sure that we could cover those businesses. And so we had the chance with one of our clients to perform, along with an auditor. We helped a client in a technical accounting firm. We helped a client get through one of the first audits of a firm that had done both venture capital raise and a coin offering, and get them through this audit where, there was not I was going to say there wasn't a lot of written rule sets that we were following, and a lot of history. There's none, right? And so, it was a really amazing opportunity for our team to kind of grow through that process and take this on and take on this challenge and making sure we got this client through the audit. But if you were simply narrowly focused and trying to do the same thing over and over again, you may miss some of those opportunities as they pop up, right? And so you got to keep an eye on market trends and where are what industries are growing and where are the new opportunities that people are going after. I think that's a big deal. And that's, looking externally at clients, but also internally, right? You can't grow if you're not using the right tools, right? You can't grow if you're not doing the work efficiently for clients, and you can't, and that they can't trust that you're using the best products out there for them, and that your team's trained to do it.
Right. So what are the challenges you face in acquiring new clients for 2019?
I think the challenges, they never really go away because, it's just the speed and size of which you acquire them. As probably I'm sure my sales team knows, right? Great, we set a goal, we achieved it. What's the next goal? The great thing is I have an awesome sales team. They love having the next challenge in front of them, and they love, you set up that target. They're going to go, gung ho for it. And that's, it's really an amazing thing when you have a team like that, but to achieve it, we have to continue to find ways to attract the right clients, to help them grow and to show them the value that we can provide, not just in the immediate pain point they're solving, but what comes next, right? What's the next things we can do for them? I think, elongating the relationship with clients through the value you provide is part of that, right? That can drive, that's a driver for growth. But also continue to ensure that, your team has the capacity to take on, right? As a service provider, you can't just sell, right? So I think that's got to be a clear thing. There's no such thing as just a sales organization, right? When you have a tech product, whether you have 2 clients on that tech or 1 million clients on the tech, it may not change at all, right? But as a service provider, we have to support that client growth by hiring and training and onboarding really exceptional people. And our team right now is exceptional. And the one thing that is a theme that all founders, should know, if they haven't learned it already, is that really good talent wants to work with really good talent. And if they feel like they're in a place where people don't share their ambition and their goals and their drive, they're not going to stay there very long, right? And so, back to that whole cultural thing we were talking about earlier, is making sure that people find that their work environment is a great place to be, that they're challenged, and there are other people who share that drive and that passion with them.
Right. How about on the marketing front? I know from what you shared with me before, it sounds like you are willing to experiment, test out different marketing channels. What marketing channels are you thinking about testing out this year?
Yeah, I think, it's a good, and one theme that we never talked about earlier was also there's marketing that's the marketing done digitally, and that's one form of marketing. But as, I think some of these brands like Hims could attest to, right? They grew really effectively. That's a consumer brand, but they grew really effectively by going offline, right? If you, I think, and you walked into certain urinals at bars, you'd see an advertisement, a paper advertisement in front of you, right? They were really thoughtful about how they want to acquire their customers. And for us, nothing beats meeting somebody face to face and developing that relationship with a handshake and a conversation, and not a hard pitch, not a sale, but just invest in that person and their success, and them knowing that that's all you care about is what's one of those things that are important for us. To go back to your question though, so outside of that other aspect of like how do you bring in clients, you have a choice, right? That could mean you either spend more time meeting people and getting to the right spaces, the right conferences, those moments, because those are effective drivers for bringing in clients. To creating those moments, right? I think that's a marketing channel, is effectively creating those moments to get people together in the right places to meet the right people, as opposed to just being a passenger on that ride. You're actually the driver of that experience. And then the other piece for us will be hopefully find some of these tests go positively for us, and we continue to deploy more and more capital in them, because the math is favorable to our LTV versus our CPA spend.
So in terms of the marketing channels that you're thinking about checking out, testing out, you mentioned conferences and as being a venue for meeting people. Is that the channel you're thinking about going a little bit deeper on, or are there some other channels?
I think we've always done that, and I think it's about how do you do it effectively, right? I think if there's a time, if you went back far enough in a growing ecosystem like New York, where people were really hungry for knowledge, and so they were attending a lot of different panels to as the ecosystem grew up. But now that you have a much more robust and grown up ecosystem, I don't think, for instance, hosting some of these events quite attracts the people the right way, the same way it used to, and getting the same people in the room. And so you're finding there's a lot more events, and so people saw that as an effective channel. There are a lot more. Everybody's suddenly hosting events, and there's professional businesses around it. And so suddenly you go, okay, this is harder, right? If I throw this event, it's harder to get 100 of the right targeted people in the room, right? And so you say, okay, that's not a good use of my time or money. Let me figure out some of these other paths, right? And so those are, there's the channel itself. There's also how you attack that channel.
Right. Okay. So any other channels that look interesting to you that you haven't yet explored?
Yeah, I would say that the last thing on that is there's channels that I want to explore as the CEO and the leader of my company. Mm-hmm. But there's also the ones that I want my sales team to feel open to explore, the ones that excite them, and the ones that get them the most energized for the space, right? Because it's one thing for me to direct them and have them take on certain things, and some of those things will fit within their natural skill set, or some things I need to give them support, or another person on the team has to give them support. But ultimately, if they're really excited and jazzed about something, they're going to go do it themselves. They'll find a way to make it happen. They'll execute it at a high level. They all interconnect, right? And so it's one thing for me to be excited. It's another thing for me to, again, to go back to that theme of listening I brought up earlier, to listen to my own team members and listen to what they think is exciting and where they're finding results, and then supporting them and reinvesting and doubling down in those areas.
Right. Okay. Have they mentioned a channel that sounds pretty interesting that you haven't gone deep in yet?
I think for this year, we're still in some early phases of what we want to do and some tests we're running. Mm-hmm. I think that's kind of our theme for that team. A challenge I put in front of them for Q1 was, let's find some additional challenges that you guys are excited about that we think can work, and we're going to see how they do. And then based on that, we'll adjust our budget for the rest of the year.
Very cool. All right. 3 last questions for you. Say you decide to go out for the weekend, leave New York City, you're on a freeway that's moving, and you have a billboard that's out there that people only have 6 seconds to see. What would be your billboard message?
That's a great one. It's funny. We've gone through a few quick we've gone through a number of different elements over time, and I think it's where we used to be. I really like I know it's supposed to be a quick answer. What we used to be was you focus on your business, we focus on your math. We had a really quick 1-2 like that way back in the day. But I do think now that we've refined our message around that we're the leading financial services provider for high growth companies is really who we are. It's what it is, and it's not sexy, but it's who we are, right? It's a very accurate representation. And when people need that, we're who they come to.
Right. Okay. And 2 last questions. You talked about this before, but maybe you can recap again. Who are your ideal clients, and what's the best way for them to reach out to you and your team?
Absolutely. So our ideal clients are companies that have either raised or in the process of raising or close to raising institutional money, or they've grown profitable or enough without having to raise outside money to where their business is at the point where they're scaling and they need some financial support in terms of scaling, understanding how to do it the right way, what systems they need to get in place, what expertise do they need to bring in-house that they haven't had to leverage yet. And the way they get in touch with us is twofold. They can visit our website, www.nomadfinancial.com. And on that site, there's a form to reach out to us. You can also email us at info@nomadfinancial.com, and you'll get in touch with our team there.
All right. Fantastic. Why the name Nomad Financial?
It's a good question. It's actually a double entendre. So the company itself, when we signed paperwork, we were in the lobby of a hotel that no longer exists. It's actually now been replaced by another hotel. If anybody's in New York City, it's I think it's the James now. It's where the Scarpetta has moved into, is where the lobby used to be. And it's in the Nomad neighborhood. And so part of it was a geographic connection to New York and the city we were in when we launched. But we also love the idea that, our people are nomadic in nature. We don't work full time for any of our clients. We're in and out based on their needs. And so it felt like a very appropriate name for us.
All right, cool. Thanks for joining us today, Jonathan, and sharing how you accelerated your company's high value sales.
Absolutely. Thanks for having me.
We've been speaking with Jonathan Goss, the founder and CEO of Nomad Financial, about his company's rapid growth. For interviews with other fast-growing high-value sales companies, or to learn how we can accelerate your firm's high-value sales through automation, visit eversprint.com.